So looking ahead to this week starting November 25th, if there is to be some action in the market, it should be front loaded this week because it's Thanksgiving on Friday, and so generally speaking markets tend to slow down a little bit, particularly in the US where obviously they'll be closed for the holiday. As far as events, it says a few political happenings. The EU is appointing its new commission this week. And of course we have the ongoing UK election, and the highlight will probably be, or at least maybe the agenda setter for the week will be at the weekend prior to the start of this week will be the release of the Conservative manifesto. So at that point, obviously, as traders we'll be able to match up what's in Labour versus the Conservative and have a better feeling about who maybe has a good chance of winning that election. And then as far as economic data and financial data out there, it's pretty much the end of earnings season now. There are a smattering of earnings around, but there are a few growth stats, including US growth as well as German growth, which will give us a little feeling as to how the economy bears into this market performance. Now, generally, if we are talking about the market backdrop leading into this week, then we've had a little bit of a pullback in equity markets. So US indices, the S&P 500 and the Dow, pulling back off those record highs. NASDAQ still teetering right on those record highs, really being bolstered by Apple, which, as a reminder, is up 70% this year. Other indices not faring so well, the pullback been a little bit more deep. In Asian markets, for example, they're hitting 3-week lows. Some of the more export orientated indices in Europe, particularly the DAX, that's had a bit of a pullback. So generally a little bit at risk off, all relating to the trade war. The US dollar has been pretty mixed. One of the most interesting markets has actually been oil, which saw a big dip on concerns about the trade war, but had a subsequent rally because now expectations are picking up that OPEC in their meeting in December, which we'll talk about probably in next week's video, will be looking to keep those production curbs that they've been doing. And so that puts a little bit of a floor under oil supply. So oil prices have been pushing higher. Oil, much like gold, much like the dollar, has been a little bit more range bound. We're still trying to determine if there's any kind of top being placed in gold at the moment. So now I'm going to look through to the economic calendar, which is a little bit sparse this week, in part relating to that US holiday, I think. But worth noting, I think, there's a retail sales from Germany. We don't typically put a lot of emphasis on these figures, but just Germany is in a crossfire in terms of its economic performance, and so that'd be one to watch out for. US GDP as well, the analysed quarter-over-quarter number coming in at 1.9%, which fits in with what I'm about to talk about in a minute, which is a bit of a kind of growth slowdown going on, but perhaps that will end next year. Durable goods orders also from the US. We've got German GDP stats coming out later in the week, and also GDP from Canada right at the end of the week there, as well as CPI from the Eurozone, which will be interesting in the context of we've just had the first major policy speech from the new president of the ECB, Christine Lagarde. So I mentioned a couple of the events that are happening this week. So I don't believe the appointment of the new EU Commission is going to have any real bearing on markets. Again, the UK election, will be following day to day, and we'll be looking at that reaction to the Conservative manifesto. We don't have it yet. So I want to talk about a bit more the overall outlook here. And we do have a couple of GDP stats, including Germany and the US next week. So we're thinking about growth and how this plays into the markets at the moment. The S&P 500, that's up 24%. This year at the time of speaking. It's obviously a huge performance for an index, especially when there's so much uncertainty out there. And so part of the explanation of the rally that we've seen recently is an uptick in optimism about where global growth is headed. But that's a bit interesting in that the IMF have just called the outlook for growth precarious, and the OECD have just lowered their growth forecasts for 2020 to the lowest in a decade. So clearly there's a bit of a disconnect between economists and markets. Markets, if you judge on that 24%, really looking for a big uptick in economic growth next year. And so I think what markets are pricing in is this economic policy that's being put in by the Federal Reserve and the ECB and the others, other central banks, which is just cutting interest rates and reintroducing bond buying. And the feeling is that that should improve economic growth, and so markets are getting a lift again. And so there obviously is a risk that markets have got this wrong. They've had a big rally this year, so then there's a risk that maybe in December we get a pullback, or early into next year we get a big drop in markets if that growth outlook gets shaken. That's a risk. The upside is that economists just catch up, and we have to acknowledge that we're in a new bullish phase in growth and in the markets. So that's how the two are interlinked at the moment. But as I said, there's definitely a big gap between what economists are saying is going to happen in global growth and this big, massive performance, particularly in US indices. Worth touching on just the other major themes that are happening in markets at the moment. The trade war, what was concerning last week and part of why we got that pullback, and I think it actually probably can be resolved quite quickly, but it's certainly a big risk factor, is that Donald Trump is looking to sign this bill which has been passed by the House and the Senate, basically offering support to Hong Kong protesters. And so while in normal circumstances in other countries it was a fairly minor thing that wouldn't even be discussed, in the context of the trade war between the US and China very big on its territorial integrity, as it calls it, this is a bit of an affront to them. And so this is basically the US calling into question China's, what they believe to be their territory, which is Hong Kong, and the US basically threatening to change Hong Kong's position as it's perceived by the US, this one country, two state kind of status that it has. If that is called into question by China's actions and how they react to the protests, then the US change how they see Hong Kong and the WTO. And it does have some potential economic implications, and obviously it upsets China and makes a trade deal that much less likely. So the question is, do China actually get upset and throw the trade deal away? And does Donald Trump even sign it? He can't veto it because it passed by such a large majority. So it's just a question of whether he tries to ignore it or take some other action. He probably won't, and he'll probably try to communicate to China behind the scenes. I would imagine that still, this is not how it appears. Actually, we can still proceed with the trade negotiation. So if that is the case, that should be good for the outlook for the trade war, and it should be good for indices and maybe an end to this pullback that we're seeing. And then just finally, the UK election. As I said, it's the release of the Conservative manifesto on Sunday. We don't know what's in that yet. We do know there's a couple of tax cuts in there. But we do know what's in the Labour manifesto, and it's just been described by various institutions as one of the biggest increases in government spending we've seen ever, someone's put, but also certainly relative to GDP since the Second World War. So big changes being offered by Labour, and it's a matter of whether the public, whether it captures their imagination and they think, yes, this is time to really try and change things by spending a lot, or they think, no, this is the state getting too big and we don't want a part of this. So that obviously will be what we're watching, particularly after the Conservative manifesto comes out, to see if this polling changes. Our expectation is the polling probably does tighten towards election day, and that's a bit of a risk factor for the pound, because just that much more likely that Labour come into power and threaten the stability, relative stability that we have at the moment over Brexit. Okay, that's it for this week. Thank you very much for watching, and if you do get some benefit from these videos, please make sure to follow myself and LCG on YouTube and social media.